ladies and gentlemen, the stock portfolio hit all-time highs today at over $118,000. We're going to break all of this down for you, including the dividend stocks, the growth stocks, and the earnings that we are currently looking at. So let's jump right into this. Welcome back to my passive income investors alike. In this video, we're going to take a look at some of the positions that have earnings that just came out, including Tesla. We had Microsoft, and it's pushed my account into all-time highs, baby. But the only thing that's not at all-time highs are my dividends, which are the things that matter the most to me, and that is because the Canadian dollar is up. And when the Canadian dollar is up, my US dollars are worth less. Not that that's a big deal, considering we're up a couple $1,000s nonetheless just in the last few days. Now, this is the reason why I hold individual stocks. Now, a lot of people want to hold just indexes, but when we take a look at my portfolio, we're going to see that the indexes are flat, yet my portfolio is up. That is why it is nice to hold a combination of ETFs and individual stocks, so you kind of get the growth factors when the indexes aren't growing. And on top of that, guys, we have more earnings coming up, including MO coming up very soon. We have the bank earnings coming up. And in light of that, let's just go check the portfolio. Come on, guys. All right, ladies and gentlemen, before we chop into my own personal stock portfolio, let's just take a look at some of the crazy earnings we have going on, starting with Tesla right now that earned $1.91 per share versus an estimate of minus 0.24. So they did not see that one coming, and it blew the stock out of the water last night. We saw that the stock went up like $50, went back into the 300s from the 250 range, which was quite incredible. I still hold this in my portfolio. I wish I was buying on that dip. I was telling people that it'd probably be a good dip buy, and unfortunately I just don't have the funds. I've been building up the funds in a little side fund for Tesla, but I wish I was buying it down on that dip. But who knows, maybe we'll get some more volatility. We'll see it come back down where I will pick up some more shares. Moving into Microsoft came out with a quarterly earnings of $1.38, beating the consensus of $1.25, but it did not push the stock that much higher. I think Microsoft has been mainly priced in for the year. They went on one heck of a run this year, considering the stock went from $100 and it's up like 35 at the high of around 40% this year alone. So I imagine a lot of the earnings for this guy have already been priced in, but it'll be neat to see how this finishes the year nonetheless. And then finally, the most important earnings that haven't come in yet, but the one that I'm going to be paying most attention to is Altria Group. Altria Group is coming out on October 31st, and it is currently one of the largest positions that I've built in my portfolio as of recent. And we might as well just hop in because this stock has been down immensely, even though this year alone, the stock hit a low of what, minus 30%. I'm trying to get it so it doesn't black out there so you can see it without it being blued. So we can see that we're down 34.75% at the lowest from this year alone. And we're going to take a look at some of my average buy prices and what I got in at. But before we do, let's start with the tax-free savings account, which just clocked all-time highs over $90,000, which is pretty awesome considering the contribution limit in this account is only like $62,000. So we're seeing almost a $30,000 capital gain in this account over 5 years. My goodness. Not complaining at all. We have some dividends coming in very shortly from the banks. The banks are going to be paying me out at the end of this month, so we should be seeing about another $300 or $400 in dividends coming in from Bank of Nova Scotia, Canadian Imperial Bank, which have actually started coming back nicely. I was really down on these positions a while ago, as I'm sure you guys remember. I was down upwards of almost $2,000 in CM, and now we're starting to see it come right back. It's nice seeing what's going on in here. We're finally green on MO in this account, not my other one, but this account we finally got some green going on. BTI still needing to catch up, even though it was outperforming MO this year. It's starting to not do as well. Apple's been Apple. Apples are apples. Can't compare them to oranges, but I mean, they're still crushing it. We're up 40% on Apple. We've got Microsoft sitting up 35% at my average buy at the beginning of this year of around $103. Southern Company still on a tear, almost at $62, being one of my best performing stocks in this portfolio. Absolutely blowing my mind. Moving into my managed account, within my managed account, guys, here's my other position in Altria Group, making up another 7,000 or 8,000. You have to remember these positions are in Canadian dollars, so this 8,000 roughly I contributed here is Canadian, and in this account, this is 7,000 US. So if you convert it to CAD, you're looking closer to 9. So we have roughly, I don't know, I'm going to say about $15,000-$16,000 give or take in MO alone. So it's very important that we see some decent earnings coming out on these guys. On top of that, BTI, guys,
I also filled out to be a massive position in this portfolio. Doing a little better in this part of my portfolio as I got a lower buy price at $33 or just under 34 a share, which in this account, we've got an average buy of roughly $37. So big differences between these two portfolios. We can see everything's doing pretty well except for Starbucks. Starbucks, this is probably the best time to start buying, and I do have some money, and what I'm going to do, and I keep saying I'm going to do this, and I haven't done it yet because I hate earnings, and I hate trading through earnings. So what I'm going to wait for is just another month to go by. Let's just get through the rest of earnings seasons. Then I'm going to sell off Johnson & Johnson and Starbucks, move them into my RRSP account where I hold my index funds, and I'm going to buy them back, and I'm hopefully going to be able to add a couple more shares of each because I really think Starbucks is getting toward a very good buy price right now. And I only bought a starter position in it that I plan on growing over time, and this is a company that just never seemed to go down, but now that we're down actually 15%, it's starting to look like a very healthy buy. I don't really care because the position's not big enough to make a difference in my portfolio. Sure, I'm down $332, but at the end of the day, guys, it's barely a blimp considering the portfolio's up $3 or $4 grand over since last month alone. I mean, we started the month at $114,880, and currently we're sitting just over $118,000. And then in my final account, well, there's Tesla. We can see Tesla, I have a buy price of $345. I wish I was buying that dip, man, but because I'm so dividend focused, I haven't been buying Tesla as much because it's a pretty speculative positioning because I plan on holding it for at least 5 years, 3 to 5 years at the minimum. I mean, I don't really care what the daily fluctuations are right now because I predict that the stock could be easily worth over $1,000 a share. So, I mean, who cares if there's a $100 difference in the buy price right now? So, I mean, I will pick up some more shares and then hopefully the near term, depending on how much income I can add to it. But because I need to get this money out of this account into the RSP to avoid taxes, I have to do this just carefully, patiently, and just try and understand what I'm doing to the best of my abilities. Now, this is the reason, as I've said in the past, I own a variety, and I'm going to be buying more of this as well, is VFV, the Vanguard Index Fund. It's an S&P 500 index. Now, a lot of you guys want to always push for index funds, and this is the reason I'm saying you shouldn't just invest in index funds, because my index fund is down. We are actually down about, not a lot, I mean, we're down 0.28% or $11. Meanwhile, my overall portfolio is up a couple thousand. So this is why you want to diversify in individual stocks and index funds, because you're never going to see that nice rate of return where you're getting like 15 or 20% in a year if you're only holding index funds. Unless the index does really, really well, it's usually not going to outperform like Apple or Microsoft or just some of those individual companies. You're not going to get those really high dividend yields, which really help contribute, because you got to remember that 118,000 that I am up in total there, guys, that doesn't really, though it kind of contributes toward, because I mean, part of that is dividends as well. But we'll have to take a look at the performance and just see how the overall performance is versus the dividends when we get my performance at the end of this month in just a few days, in less than a week, guys. We should have the performance for my overall accounts. So this has been a very interesting video, guys. Let me know what you think in the comment section below.
If you enjoyed this video, consider slapping a like and subscribing. I make videos about finance and all kinds of fun stuff to do with my own personal dividend stock portfolio I show you here on a weekly basis. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.